All right, welcome back. We're going to do another trade plan, part of our exercise where we're going to line up 30 trades, making a plan for each of them, knowing exactly what we're going to do with our entry, our stop, our exit, our position sizing. We'll plan it ahead of time, and then we will execute it according to plan. So today we're looking at FNV, and we'll make a trade plan. You know, traders, we often read and hear that we should be patient. But we also need to know exactly what it is we're being patient for. If we don't know what we're being patient for, it's just out there, right? It's too abstract. You have to know exactly what you're being patient for. And so I know that I'm being patient for my conditions to be met. I know I'm being patient for my entry to get hit. After I'm in the trade, I know. So I have a contrast rather than just this abstract be patient. We want to know. Same thing when we went over the last lesson I was talking about. Well, you're supposed to follow the flow, follow the trend. What trend are you following? You want to know what flow you're following. So in these lessons, we're just going to work on being more precise in everything we do. And, what is patience anyways? Patience is being able to hang with the restless energy you have, right? When things aren't happening the way you want them to happen. That's what being patient is. If I want this market to hurry up and fill me, I'm being patient for what I put in my plan. So patience is a discipline that we adopt until we don't need it anymore. That's what patience is. If we lose our patience, we stop waiting, what happens is we're going to want to create an opportunity, force a trade, rather than let things evolve at their own pace and speed. So when we lose our patience, we try to make something happen. And the market really doesn't care. The market is a very patient teacher. It's just going to keep teaching us the same personal lessons that we need over and over and over. So, that's what patience is, and it also allows us a little space to slow down and see what's going on and not do the habitual thing. But you have to have a contrast to the impulse, and that's what our plan is. So I know what I'm going to do, right? And so I also know, let's just do a little thing from our last lesson, which was, how do I know which way the market's going? Just grab it anywhere, and I'm going to use a cycle, just 100 bars. I'll put 100 bars on the chart. And this way the market is going to tell me which way it's going. It's going up, so therefore I'm looking for long trades. It's going up, so I'm looking for long trades. As it starts to pull back too deep, I start to shift to neutral because now we're in range. And what I do is I might want to trade, but I patiently wait for the market to clear it up and give me some direction rather than just hack away at this thing. I've been trading for a long time. I've done my share of hacking away. There's probably not much anybody else has done that I haven't already done when it comes to crazy things. And so when it comes down, I'm going short, right? I'm looking for shorts. I'm looking for shorts. I'm looking for shorts. It's going down. I'm going down. So we're not talking about methods here, but this is my analysis. It's going down, therefore I'm going to short it. I'm a swing trader, so what I'm looking at is I have a new lower low, I have an impulse, I have a pullback. And so I'm looking to hop on the pullback. I'm going to use some of the bouncing around it likes to do for an entry. That's my analysis. I don't know anything about gold or the Fed or anything else. It's going down, I'm going to short it. I'm looking at a reaction leg to stop pulling back and give me an entry. It works, it doesn't work, I move on. End of my analysis. All right. So that's all the hard stuff out of the way. Now let's plan our trade, because that's what these lessons are about anyways. I just like to talk about these things as I go. Hopefully it's beneficial for some others, but it's beneficial for me to talk it out. I often encourage people to post and see if they can give a little lesson, because one of the things that happens is the person giving the lesson gets the most out of the lesson. So over here, I'm just going to have my trade plan in a template. And so whatever your method is, however you want to set it up, just make a little template. It's going to basically tell you, don't leave it abstract. Don't leave yourself too many escape routes. Know exactly what your entry is, what your stop is, what your shares is. I know I'm risking 0.5% of the Mach $100,000 account, 500 per trade. I know my target. I know my management. So you'll be seeing me. I have basically two types of entries I might do. And one is where I'm waiting with a limit order to get in, and one is where I'm going to let the market take me in. So that's what I just have a name for that 1R. So what I use now for myself is I just measure this reaction leg and then cut it in 25%. And so this way I have something objective. There's nothing special about this. You can use anything you want, but it gives me something objective in the different zones of a swing that's in process that I can use. So what I'm going to do is I'm going to stop my way into this market. All orders are going to be placed a day ahead of time. So I need this market to come down and hit the 50% line of the reaction leg. It's a bit of a confirmation saying, take me in. Okay. So I'm going to sell stop, and then I'll put a stop right here. And the management for this kind of trade is going to be at 3-to-1. I'm going to start to trail by 2R, and R is a risk unit. So I'm risking this much, and so that's one risk unit. When it hits 3 of these, right, I'll start to trail by 2 of those. All right, so now it's just, let's put it in. I know that my entry is going to be 108.14. I know that my stop's going to be 111.06. And again, don't pay too much attention to the method. Use your own. This method loses most of the time anyways. And I'll start to calculate my shares. Now, this is part of my routine. I'm always going to enter this into a spreadsheet even before I enter it into my broker. So I just have a simple spreadsheet. You can get a free journaling software online anywhere. So these are our current trades that are out there pending, right? It's always right there. So I'll just fill that out. Today's the 29th. And we're talking FNV. I think they're a gold miner. And we're going to be going short. Why? Because that's what the market says to do. I know where I'm going to enter, 108.14. I know where I'm going to put a stop. You can use different stops. Everything affects everything. But I use a bigger stop, then I can get less risk reward. But you can use your own, whatever makes sense to you in your own method. So my stop's going to be 111.06. And that will calculate, this is going to calculate my shares for me. And this management is 6-to-1. It's going to calculate my target. And, to get shares, you should know this anyways, right? So basically, I'm risking 2.9 points between this. And so I take that 2.9, divide it into my 500, and I'll get 171. And I always double check. because I have a tendency with numbers to put God knows what in there. So now I'm going to finish putting my shares in here. It's going to be 171. I'm going to put my actual target, which is going to be 90.62. And you can put whatever notes you want. I want to say something about it, blah, blah, blah. So here I'm going to use, let's see, the risk reward tool to help set up my order maybe. Still getting used to all these tools. And then we'll place the order and make sure everything goes. Set this guy to 6-1. And maybe 6-1 is a little bit of a stretch. But, we'll do this consistently. And by the time we'll find out if it's a little bit of a stretch. And, if you have an objective method, you can even go back and test it. So we'll create a limit order. We need that to be a sell stop. Apparently it doesn't like that. So, I'm getting used to their paper trading thing. All right, so what we'll do is we'll adapt, try this another way. Let's just go ahead and put a manual order here. Sell stop, and then we'll fill everything out. All right, so we'll put this as 108.14. Doesn't like that either, huh? Sell stop at 111. Oh. All right, hang on. We're going to have to spend a minute to figure this out. Well, let's just try it again. Sell stop. Stop loss is going to be above. All right, so it looks like it might like this. 108.14. Don't know why, it doesn't like that. What if I went 108? 107. It likes 107. Go figure. All right, well, I'm not sure what I did, but it seems to like this. I basically just walked away and came back, tried it again. And sometimes that's the best solution, unplug it. So let's just fix this up. 108.14. It's going to be a risk of $500. It's going to be a stop of 111.06. It's going to be a target of 90.62. And we should have about 171 shares. Everything looks good. And then, you can take your snapshot of this as well. That's part of the documentation. And the only thing to know is, we're going to let the market take us in to this trade here. But if the market hits where we would have been stopped anyways, it will cancel the trade. We're not going to do it. So it's just the conditions of the trade. So, and I'll update it. Basically, what we need to do is have the market trade down here and then work it appropriately. All right. So that's it. I did a little bit on patience and knowing what we're patient for. Now we'll just hit the button and off we go. And again, double check everything later on.